Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 8th of November. My name is Russell Shaw. I'm a senior market specialist at FXCM. And I want to just highlight my email address, which is rshaw@fxcm.com. If you'd like to correspond, that's the email address that you can send the correspondence through to. Just going to go ahead, bring up our disclaimers. Here's the high risk investment warning. I'll keep this on screen for a few moments. Hey KD, good morning to you. Welcome as always. Good morning Kim and Raj. Hello James, David. It's a pleasure to have you all on the webinar. Thank you very much for signing in. Thank you for everyone signing in this morning. Very much appreciated. All right, let's go ahead, bring up the market commentaries disclaimer. Okay, and our references, what we have here is MarketScope 2.0 and TradingView.com. Let's go ahead and take a look at the real rate. It's typically where we start, and bringing up TradingView. This is the daily chart here, and we've got the long impulse down here, and what we were talking about yesterday was a potential rally over here, and I don't know if it's going to play out this way, but potentially push down. You see, the thing with yields at the moment, just as we've entered the sticky part of inflation, we might get a sticky aspect to yields as well. And instead of a push down here, we may get something more to sort of a lateral type of movement, which I don't think would be optimal for us as traders. Let's just go ahead and take a look at how the US dollar behaved yesterday. And I just got a split screen here that we can use. Let's just bring up the US dollar. Okay, so it's interesting. We did get the pushback over here. So we've got the 1-2. Then we've got the 2-3. We did get some resistance coming in there, and that's what we were talking about. Is that potentially we're going to get some sort of push down. Here was the push down. So the left chart's the daily chart, the right chart's the hourly. So we've zoomed right into the sort of. It's kind of looking like this. It's kind of looking like that. So there's the 1, 2, 2, 3. There's the 1, 2, 2, 3, and then we did get some push. Trying to just get another line here. We did get some push down, which we suggested could happen. In order for that to happen, we needed to see the break in the momentum. So we got the break in the momentum. It came quite late in the day, and now if you take a look, we're still in zone 3. Okay. Sorry, Kim, just explain. It says this messed up my trading. Just explain. So what we've got here is this zone 3, and then we've got the movement here. Okay, we have got this break in the momentum. Let's just go through to the main layout here. I think it's going to be easier for us to do the analysis there. So I'll just go to our main layout. Let's just bring that up and carry on with the analysis there. Okay, Kim saying thought the US dollar movement would carry on up. Let's just take a look at it again. We were looking potentially at that 2-3 correction on yesterday's webinar. So if we go back to the real rate, okay, I beg your pardon, computer just froze up there. We were looking specifically at that 1-2 down, 2-3 correction, and then the possible movement down. So if we take a look at the US dollar, this is the line studies we drew in yesterday. Okay, starting from the weekly, we said there was a reference candle reversal in. Okay, then we said that it's dropped through to zone 3. Okay, and then what we said is that we've got a confluence of resistance. There's 62% retracement. There was a pivot there. I think it was the R1 pivot. No, it was yesterday's R2 pivot, I beg your pardon. And then we had the support into the resistance area. So the idea here is it's hit this resistance area. Now, given the fact that we've got this movement where there is this dominant candlestick from last week, given the fact that we have shifted down into zone 3, remember, if this is a dominant movement, 1, 2, looking to see if we can get into some sort of 2, 3, and if there'll be the next 1, 2. Now, I don't know if we're getting this 1, 2. As I said, the rates seem to be quite sticky because inflation is sticky. If we get a lateral movement here, that's going to be tough for us. But if we take a look at the zones, okay, if we take a look at the zones and try and marry the hourly time frame with the zone, okay, so then we still got this 62% retracement, which seems to be respected by the price movements. I think more importantly is we've got the support here that's acting as a resistance. So let's take out the retracement and just take a look at this in terms of support turning into resistance. This is what we call the principle of polarity. And then what we want to do here is we want to see if the EMAs roll over. Okay, so again into the resistance. So let's move this resistance over here. So we're looking at a potential key reaction level. We want to see if we get the EMAs crossing over down. Okay, if we get the EMAs crossing over down, that's trigger 1. Then we want to see if we get the stochastics crossing down. If we get the EMA crossing down and we get the stochastic crossing down, okay, that's 2 signals, that's 2 triggers, and then it really depends if the momentum moves towards the lower quintile. And if we get that pull down to that lower quintile, then we get the underlying momentum. What's the key driver here? Remember, the key driver here is the real rate, and we've got the real rate 1, 2, 2, 3, and what would be interesting in terms of monitoring the real rate, we would be looking at yesterday's candle as a potential reference candle. You see, it's so far today's candle is still an active candle, so I can't say for certain, but it looks as if yesterday's candle's got the highest high, unless there is some extraordinary movement in the real rate that pushes higher than yesterday's high, but it does look as if yesterday might be a reference candle, and if it closes below yesterday's low, then I think that dip in the uptrend scenario that we spoke about yesterday is potentially taking place. Remember that a dip in an uptrend scenario looks like this. I'm just bringing up Microsoft Paint. The dip in the so kind of dominant force down, and then what we're doing is we're trying to take a look here. Okay, trying to take a look here. Do we look at the real rate on the lower time frames, and will that correlate with the same time frame on the USD? So sometimes I look at the lower time frames on the real rate. The truth of the matter is, what we're trying to do with the real time frames, we're trying to line it up with what's taking place with the fundamentals. This is the fundamental aspect of the analysis. What's affecting the rates? So yeah, I mean, the lower time frame movements can be used potentially as a signal. I think that's you know, we're getting very granular there. What we're trying to understand is, well, what's driving the real rate? Well, what's driving the real rate is the fact that we've kind of moved into that Goldilocks economy type of scenario where inflation is coming down. Okay, it's now hit that sort of sticky part, but it's still coming down. The job numbers on Friday showed not extreme, but they showed significant moderation. And the markets have now started adjusting the real rates accordingly. And what we're now attaching to those fundamentals is the technicals. We're trying to see, we're trying to line up trend, the wave patterns of trends with the underlying fundamentals. So the idea here is to try and line up technicals with fundamentals. You can go granular with the real rate. It's not something that I would put sort of too much importance on. The idea is to understand what's the underlying driver of the markets. Okay, the technicals only telling half a story. We've got to know what's the underlying drivers, and then line up the technicals with that. It will make us better traders. So the idea here is, well, this is the dominant movement in the real rate. This is the dominant movement in the real rate. Well, if that's the dominant movement in the real rate, what's causing it? And when we understand what's causing it, how does that affect the instruments that I'm looking to trade? Okay, so that's what we try and do with the webinar. So now we want to see if the US dollar reacts off of that, and if the US dollar is reacting off of that, we go through to the euro US dollar, and you can see, well, here is the support right on this S1 level. Okay, and what we would want to see is, well, if the dollar is going to push up, okay, and the only way we can tell is we can't predict, we can only react. We've got to see a crossover of the EMAs, okay, and then we've got to see a crossover of the stochastic, and this is what we drew yesterday. We said the momentum's got to break. Well, it's broken. What I mean it's got to break, it was stuck in the lower quintile and it pushed out. So now that it has broken, we kind of now looking for the support to effectively come in, so to speak. Let's take a look at what's happening on gold. Gold, okay, seems to be reaffirming its correlation with the US dollar. Well, if the US dollar is starting to react, is gold starting to react? Let's just take a look at that. Okay, so you can see that the gold momentum, also the downside momentum broke. Yeah, okay, it broke. What we were looking for, okay, is potentially, if we do a top-down analysis, 1, 2, 2, 3, it's getting a bit tough here because the daily chart has lost its direction. When I say it's lost its direction, it's now moving sideways. It's broken out of zone 1, it's gone into zone 2. But if the US dollar is going to come down, and again, I don't want to predict that. I want to react to that. I want to see the EMAs cross over. I want to see the stochastic crossover, and I want to see the stochastic move to the lower quintile. Then I want to see if the precious metal support holds. Okay, and if the precious metal support holds, I'd like to see a bullish crossover here, bullish crossover in the EMAs, and I'd like to see a bullish crossover in the stochastic. Okay, so if we can get a bullish crossover in the stochastic and a bullish crossover in the EMAs, well, that's the dual signal, and then we want the momentum to move into the lower quintile. Okay, we've just got 2 minutes, and then I'm going to move to the crypto minute. So I want to go through to the DAX just to see how the DAX is due to open. So let's just go through DAX. Okay, and this is interesting. Okay, so this is, let's go through. Okay, so DAX is still struggling to push across this down-sloping trend line. We did note it previously. There is a lag in DAX compared to the American indexes. If you take a look at this on the daily chart, I just wish the DAX would catch up here and move to zone 1. The fact that it's not moving into zone 1, well, you know, it's making it tricky because zone 2 is essentially a neutral movement area. What we can do is we can take a look at this in terms of a reference candle. Okay, so we can see if there's some sort of movement today that takes out yesterday's high. That would push us into zone 1. But in order for that to happen, there has to be positive movement on hourly. This is looking quite tricky. In order for that positive movement to happen, I would feel that the US dollar will have to come down. And if the US dollar EMAs and the stochastic trigger, we want to see the trigger on the DAX and the trigger on the stochastic. Step 1 for DAX analysis, I think, would be to monitor the S1 level. There seems to be some sort of support here. It looks like it's cracking, which is not great, considering, you know, we're backing to get into zone 1. So let's just see if we get some sort of bullish support off of S1. Again, don't predict, react, wait for the crossovers to occur. If we hang out in the lower quintile here, gee, that's going to be a risk-off day. And if that's going to happen on the DAX, then just taking a look at the US dollar, that will make the US dollar more complex than I would want it to be. I really would like this resistance area to be a key reaction level and push down. Okay, if we get sort of a movement up towards R1 here, that's going to put pressure on the DAX. Okay, because why? Because the dollar is a safe haven. It's taking money out of the risk side of the market. All right, we've just gone top of the hour. We're going to have to conclude here because I'm doing the crypto minute. I hope that you found this useful. Tomorrow we'll have more time just to spend on the analysis. Thanks very much, guys. Have a great day, and chat to you tomorrow. If you'd like, please join me for the crypto minute.